Today we'll go through the key indicators to prepare for the cycle top. I'll also show you a pattern I haven't seen anyone on YouTube talk about, one that might play out again as a cycle top confirmation. Let's start with the 50-week moving average, an indicator that's grown massively in popularity this cycle. Almost everyone is talking about it now. Bitcoin obviously hasn't lost its 50-week support yet, but we have to ask ourselves, does this indicator really work? In 2017, it took a -65% drop on Bitcoin before we got a real confirmation using the 50-week SMA, far from an early or useful signal. The current setup is a bit different though. The 50-week sits around 101K, and in terms of exiting a Bitcoin position, doing it at roughly -20% from the top seems reasonable when you consider how deep historical bear market drops have been. When it comes to alts, in 2017 it was way too late. In 2021 it was still late, but it was better than having no exit plan at all. Many alts were already down around -70% when Bitcoin closed a full candle below the 50-week, but they still hadn't bottomed. So exiting at -70% was painful, but still much better than holding through -95%. Today, the situation across altcoins looks completely different. Bitcoin is still hovering near its all-time highs, but most alts are nowhere close. Even large caps like Solana are struggling, down around -40% and trading at the same level they were at in March 2024. There are exceptions like BNB, which has been running hard recently, but that's rare. If Bitcoin starts closing weekly candles below the 50-week SMA, you can only imagine where alts would end up. Easily -50%, maybe even -70% lower from already depressed levels. So, does it make sense to use Bitcoin's close below the 50-week SMA as an exit signal for alts? Probably better than nothing, but it's far from perfect. Nothing in markets is ever 100% accurate, and there's always a chance that the market bounces back even after Bitcoin closes below its 50-week SMA. Time is one of the oldest and most obvious frameworks when it comes to predicting Bitcoin's tops, and as we get more data each cycle, it's becoming more and more reliable. For those who are in their first cycle, it's worth to know that during the last one, many expected the lengthening cycle theory to play out, since the 2017 cycle lasted noticeably longer than the one in 2013. But in the end, 2021 peaked almost exactly in line with 2017's timeline. The takeaway is simple. The market rarely does what the majority expects. If we measure from the bottom, the current cycle's low was in November 2022. From that point to today, we're almost 1,060 days in, looking at history. In the 2013 cycle, Bitcoin peaked in November 2013 after 743 days. In both 2017 and 2021, it was approximately 1,060 days, which puts us in the same historical topping zone right now. By timing alone, if history were to repeat, Bitcoin should peak any day. That doesn't guarantee the top is in yet. Markets don't obey historical patterns to the day, but the risk is definitely higher. Once a cycle enters its final stage, volatility rises, which we've already seen recently during the biggest liquidation event in crypto history. When we measure the cycle starting from the halving, which makes sense, as Bitcoin's issuance rate gets cut in half and historically major runs followed after. We're already past the point where all previous cycles had peaked. The difference between 2013 and 2021 was almost 190 days, so if we were to peak a couple of months later, it wouldn't be super unusual according to the data. But we simply can't count on it. Another way to measure cycles is from peak to peak. From the 2013 top to the 2017 top, it was 1,477 days. From 2017 to 2021, it was 1,428 days. And now we're already 1,435 days in, so we're right in between the previous two. Of course, it could go a little longer and that would still be normal. But again, we can't count on it. Putting it all together, whether we measure from the bottom, the halving, or peak to peak, the conclusion is the same. Going a bit longer wouldn't be strange, but topping right now wouldn't be weird either. I'd count this as a flashing top signal since we're already in the window where the cycle should be ending. Let's look for more confluence. Price action itself can be a really valuable sign that a market peak might be in. I haven't seen other influencers talk about it. Spotting a pattern in the market that isn't popular yet is key to having an advantage. In 2013, we had some big dumps just like we've experienced now, followed by a recovery to a lower high. The interesting part was January 2014, a month of sideways to down price action, suggesting that the market might not have what it takes to make a new high. In 2017, it was a similar situation. A dump, followed by a recovery, and then in January, sideways and downward price action. A clear lack of strength that led to a complete breakdown and the end of the 2017 bull market. In 2021, it looked almost the same as 2013. Price dumped, then moved sideways for about a month, showing weakness. But let's stop here for a moment. This has to be combined with cycle timing. For example, in May 2021, we also had a dump followed by months of sideways action. The psychology is important. If there's a reason, in this case, cycle timing, for people to buy, such price action can just be a reaccumulation. But if the cycle is in its advanced stage, coming toward the end, then the more likely scenario is that more and more people start de-risking. That leads to more panic and more selling. Now, when it comes to the current price action, we can't clearly see the pattern from previous cycles repeating yet. If we drop below 108K, then go sideways down for a month and start breaking lower, that would look like the end. In terms of price action combined with timing, even though we've had a huge flushout in the altcoin market, Bitcoin itself looks like not much has happened yet. We're still very far from a confirmed top. Let's go through some sentiment indicators, starting with Ben Cohen's social risk metric, which takes into account things like YouTube subscribers and views, X posts, and overall engagement. This metric is currently at 0, which means there's basically no interest in crypto on YouTube or X. The two peaks this cycle were in March 2024, when Bitcoin hit its first new all-time high of the cycle, and the second one came after Trump won the election, which sparked the breakout and a rally past 100K. These two peaks align perfectly with my personal view. The market felt the most heated in March 2024, followed by the post-election pump. It's always worth considering whether an indicator actually works the way we want it to. For example, I think the fear and greed index isn't nearly as useful in this context. Coming back to the chart, in 2017, the social risk metric went over 0.8, and in 2021, it actually hit 1 in May. In the current cycle, we've barely moved above 0.4. This way of looking at the market clearly shows there's still potential for crypto to go much higher than it is right now. It basically tells us there's no retail interest at the moment, but we also have to remember there's no guarantee that retail will come back. Rapid rallies and high prices are what attract retail interest, not the other way around. What we do know for sure, looking at the social risk metric, is that there's no retail bubble right now. Looking at the oldest fear and greed index, we can compare this cycle to the previous one. We can see that while there have been a few spikes, we haven't had a prolonged period of extreme greed yet. There's no guarantee it will come, but if it does, that's usually the time to start taking profits. There's also a CoinMarketCap version of the fear and greed index, so it doesn't hurt to check both. This one doesn't have as much historical data, but the interpretation is the same. If we enter extreme greed for an extended period, that would suggest the cycle might be nearing its end. If we don't get that kind of signal, then the fear and greed indexes are more useful for shorter-term moves, since extreme fear usually marks a local bottom. Now, a very popular chart, M2 money supply. As it grew in popularity this cycle, many people started taking it for granted, assuming all Bitcoin does is follow M2 with a lag. I've already mentioned that I don't believe M2 will predict Bitcoin's cycle top. At the very least, it's a dangerous assumption. It's already starting to show as Bitcoin has diverged from the M2 money supply path. And while some websites are still trying hard to make it look like the correlation still holds, I remember how it looked in the past. More like this. Anyway, for now, M2 has been trending slightly down since late August, which, with about a 10-week lag, would correspond to a potential top in early November. Whether this is a major top for M2 or not, we won't know for some time. Let's talk a bit about on-chain analysis. It was the big thing in the 2021 cycle, everyone was talking about it, and it was supposed to be the tool that solved the crypto game. Sell when on-chain data is overheated and buy at the lows. Unfortunately, it didn't quite work that way, but is it really fair to say it failed? The data itself is just numbers. How you interpret them is what matters. When we look at CBBI, which combines several popular on-chain metrics, I'd say it actually works pretty well. Many on-chain indicators were signaling an overheated market in May 2021, which, in hindsight, turned out to be a great time to take profits. If you expected that some indicator or influencer would call the top perfectly every time, you'd be disappointed sooner rather than later. In the current cycle, there's a clear pattern. Whenever CBBI hits around 80, we get a correction. I think it's possible that if we get another rally, this thing could break out to the 90 to 100 level. I'm not going to tell you what to do, but if that happens, I'll definitely be paying attention and taking profits. To sum it all up, besides opinions and timing, there's not much sign of a Bitcoin top being in. All we can do is wait for the cycle to play out and either confirm it's over or make new highs. If I had to guess, I'd say the cycle isn't over, but the truth is no one knows. Wait for the numbers. Numbers don't lie.